Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, October 15th, 4:45 p.m. Eastern Time, coming to you with tonight's Revere Roundup Daily Market Insight video. And before I start, if you enjoy these videos, drop it a like, comment, subscribe. We always appreciate the interactions. Alrighty, so market state, we still are in an uptrend. And if we take a look at the trend gauge here, despite some volatility today, market leaders, we still have the green arrow, pretty normal pullbacks across the board, besides a few, and I'll get into those later in the video. Short term, we're 25 days above the 21 EMA, medium term above the 50-day, and long term, we're still trading above the 200-day. So we got a distribution day today in the markets, but leaders held up pretty well. 21 over 21 list down 1.69%, 4 green, 1 neutral, 6 red. Big 8 down 0.6%, RG8 down 0.7%, S&P 500 down 0.76%, equal weight down 0.41, QQQ down 1.34%, equal weight down 1.56%, Dow Jones down 0.78%, mid caps down 0.26%, Russell 2000 slightly green, up 0.08%, 60/40 down 0.47%, and in-house GROTECTION down 1.38%. So as usual, I'll get into the tell the tape, and we'll start with the inter-asset correlation. So distribution day on the S&P 500 today, but closing above the 8 EMA, so that's positive. And basically what we've been mentioning in the keys, the level still held, and we closed above 5,800. So obviously this really starts to accelerate. This previous breakout here, the top of the base, would need to see that to hold, and this 21-day support as well. In this recent mini breakout, there's another level right there. If we look at the 60-minute here, and yeah, 57.67, that's a key level, along with this level right here, 57.90 area. We'd like to see that be supported on any pullbacks. I'll just pull up an intraday and you can see open equaled high, and just pretty much a trend down day all day. RSP, gapped up and was looking to put in another 52-week high, but came back in, but still looks good. Everyone complained about concentration in big tech earlier in the year, and now that's just simply not the case. So as long as this continues to stay strong, that just supports the broader rally and not just concentration in tech. Distribution day here as well, closed right at that 490 level that we've been talking about in some of the videos, and basically this 485.54 level, which coincides with the 21-day. For bulls, that's really want to see that get supported on any tap. Again, trend down day here. This was tech really accelerated to the downside when ASML someone messed up and released their earnings and they weren't good. I'll cover that more in the tell the tape, but and pretty much just down the whole time. And if we look at 60-minute and trying to put in a hammer right at this 490, maybe we're seeing an undercut and reclaim, but just something to monitor along with that 21-day. Dow Jones just kind of putting an outside negative reversal today. Want to see this around that previous top of the base hold. Mid caps, again, nothing too out of the ordinary. The market's been pretty strong. You could argue a little bit extended, but you just don't want to see these turn into failed breakouts. There's always the saying from failed moves come fast moves, and we obviously had clear breakouts last week. So if they come back in, that wouldn't be good. But breakout retests are perfectly normal. Even a slight undercut, that's to be normal. Russell 2000 again was really strong throughout the day and showing huge relative strength versus the Nasdaq and the S&P, but came back down into the end of the day with weakness, but still looks fine, and normal spot to pause here at these left side highs. VIX, despite the down day in the markets, this was relatively muted, up a little over 4%, and it's holding on to this 20 level. So would love to see this drift back below 20. and certainly stay below 23.76. The dollar continues to be strong, coming into that 200-day moving average, but this has been a pretty big move off the lows. Gold setting up pretty nicely here in the space, and especially with the strength in the dollar recently, gold hasn't budged too much. So, if gold starts to pull back, this could maybe break out of this mini base. Gold stocks again strong, reclaiming this 40 level, kind of an undercut and reclaim of that breakout spot. And like I mentioned, dollar coming back down, that's some more fuel for gold again. Silver. Last week we kind of talked about how it rejected this level, now coming back and still looks orderly. If it comes back into this pivot, consolidates a little bit, could set it up for the next leg higher. Bitcoin strong again today. Yeah, some nice momentum here. All these moving averages are starting to get aligned, and that's usually when you get those better smooth uptrends when they start to align and hooked up to the right. So this looks good. We added this in-house today. Bonds trading below the 50-day. TLT undercut and reclaim of the 200-day. And then I mentioned, this was coming down today as well with the TNX, and this helped some of the rate sensitive sectors outperform today. So that's the interasset correlation. Let's get into the tail of the tape. So news today, yeah. So ASML, they accidentally released earnings, and that caused ASML, KLAC, AMAT to get hit hard. Basically, what they said is they warned on their orders, and then they mentioned a weak 2025 guide, and then this spilled off to AMD, Nvidia. But there was another thing this morning. Biden mentioned potentially capping exports for NVIDIA and AMD chips to certain nations. So that was other negative news this morning, but it looked to be that once ASML started to sell off, that's when NVIDIA got weaker. So day count down 1, 6 days above the 8 EMA, 25 days above the 21. And like I mentioned, open equals high pretty much, and it was just a trend down day, but 5,800 held. Sectors wise, so with the rates coming down a little bit, we saw some of these rate sensitive sectors outperform. Bitcoin was strong, real estate, regional banks, home builders, biotech, and then weakness, China sliding really fast and giving up a lot of those gains from the other month. Oil was weak, technology and semiconductors. And so in-house today, all we did was bought a starter in IBIT, and then we also added to CART, which we already had a position in. So that brought us our adjusted beta up to 1.61. Basically, the bottom line, Nasdaq and S&P log distribution days. What did leaders do? And I'm going to get into that right now. So we'll pull back up some charts. So we'll start. I already went over the IBIT chart, but we'll take a look at CART, and you can see this held up really well today. This is new merchandise, and once it just kind of the anatomy of this chart, I'll just walk it through, but was developing a huge IPO base, and sometimes people call this like the institutional due diligence phase. Words are coming out weird, but that's funds that are accumulating positions inside the base, doing their research because it's a relatively new company. Broke out of that one, came back, pulled back, and we got a position around here. And then you can see it staged a nice upside reversal today off the 8 EMA. And you can look at the 60-minute, that stochastic started to get a little bit oversold. So decent risk to reward. And this one closed green on the day and held up really well. So we'll take a look at the 21 over 21 list from best gainers to worst. Sprouts Farmers Market. Really just can't ask more from a stock. This continues to trend higher. STX has recently been showing some strength, started to break out of this cup and handle base and was super strong early today, and then just came back in with the market. This has got pretty good estimates as well. CART I just covered. Shark Ninja had that upside reverse off the 21 yesterday and just, roughly flat. This is kind of just consolidating, hasn't really done much. If you caught it early off this earnings gap, that was the ideal entry, or right here. But ever since, these two entries, it's just kind of been slowly trickling higher and just not a bunch of juice. So maybe this base is a little bit longer and get some momentum for another leg higher. GWRE, Don mentioned in the video yesterday, but this is probably picture perfect earnings gap to buy when it just trends higher with minimal volatility. That's an easy hold. IoT looks good, starting to flag here right above this 50 resistance level. Kava, food stocks are pretty strong again today in this almost hit the 21 day in the morning pullback, but closed near the highs. I'll pull up an intraday chart, and as you can see, totally opposite to the market closing high a day. So that's really good, and that's kind of what you like to see from leadership is doing better than the index and showing relative strength on a day like today. Axon, again, super strong, has that security angle, just riding the shorter term moving averages higher. F5 pulling back to the 21. Oracle finding some trouble at this previous left side high, but overall looks fine. Coherent, normal to see this pull back into that pivot plus 22%. So, and right at that 100 psych level. So maybe this pulls back into the 21 could be an opportunity. This is definitely one to watch on pullbacks. Uber, as long as 82.14 holds, which is that breakout spot, it's acting fine. And like I mentioned earlier, of course, usually the best breakouts, they never come back and retest, but even for great breakouts, it's completely normal for them to come back and undercut or test that previous left side high before continuing higher. But this one obviously still looks good. CEG, still building higher lows, especially after that gap down on Friday and close near high day. But, big move from this 171 low. So maybe this just needs a little bit more sideways. Palantir pulling back to the 8, still super strong, but just not in a viable position here. So FCX getting some weakness. It is forming a nice triangle here, but it's breaking the 21 today. And this is, getting some weakness off China. So we'll see if this can reclaim this. XOM oil's been very weak, and it shot up obviously on that Middle East escalations, but oil's just not really the sector to chase on strength. You're better to buy on weakness, moving average support. You can see, all the people chasing this here on the news headlines. It's coming back in. C Limited, it's not really in a great viable position here, but maybe some sideways, some consolidation would be nice, but super strong, obviously. MSTR, so it closed below this 200 level, but it is holding the 8 EMA, and normal to see this cool off. It nearly doubled after that 200-day bounce and rip. And if this starts to set up again, that'd be a good spot for ads. But this is the best Bitcoin stock to own. It's been the strongest, and it's just outperforming Bitcoin in general. A-Lab pulling back to this gap low could be a good low risk opportunity, and you have the 8 right there. And that's another thing with some of these earning gap and goes. Sometimes you see them come back and retest the low of the gap and then start to U-turn. BRT pulling back at a logical level, kind of a V shape in this base. So normal to see this cool off a little bit. And then NVIDIA had that all-time high close yesterday, and now it's just coming back in. And handles are supposed to shake people out, and handles are like, you prefer it because that you're not buying as extended in it, and it gives you a little bit better setup and risk to reward. So that's the 21 over 21 list. I wanted to show you guys these ASML, some of these semiconductor equipment stocks, and you can see this is when their earnings got released and it just got smoked and all day. That's super ugly daily bar. I'll show you AMAT, super ugly bar. LRCX is another one, and you can see just huge down moves, and I'll show NVIDIA, and you can see NVIDIA was already selling off, but it accelerated when ASML and those ones started to get sold off. Alrighty, so and then we did have some bank earnings today. XLF just out of the space, continuing higher, and uh, Charles Schwab was one. Let's pull up that chart. This one gapped higher in earnings back above the 200-day, so good to see financials. And as that's just one sector that you like to participate in a bull market, and that's what we've been seeing. And even this one was showing weakness below the 200-day, but now it's gapping up, so that's good to see. And then I'll pull up. So I mentioned the rates coming back down, and regional banks were starting to break out of this flat base, and they were very strong today. And then they started to pull back with the rest of the market. But if you look at names like Western Alliance going into new 52-week highs, you have Huntington, into highs. And so that's good. Zion's another one, I believe, coming out of a pretty nice base. So that sector looks good as well. And then we had real estate with a nice, we talked about this declining tops trend line, nice break back above there and follow through. And you can, some names in this sector, Zillow looks pretty good, breaking this declining tops trend line. And then home builders as well, ITB. Again, they were much stronger by like noon, 1 o'clock. And then once the market started to continue falling, these kind of came down with it. But you look at names like Toll Brothers and whatnot, this sector still looks good. And especially there's some room for rates to come down lower. And then last one, biotech's another one. 103 is the big level. It's rejected at 1, 2, 3, arguably this here, 4, 5. So this is huge resistance. And this has been one that you've been better off kind of buying on dips. You had the 200-day here, that support, but this is getting back above all the moving averages. And if this breaks out through 103 with volume, that could bring some momentum into this sector because you look at the weekly, still in a huge stage one base. The monthly, again, the move hasn't really started. It's just still been in this range for years now. Little bit, you can see this base right here, but definitely set some alerts up here because this has just been a key resistance. So once it breaks, could lead to a nice move. And then let's take a look at semiconductors. That's like a 5, 6 bar break. So that's not the nicest candle to see for this sector in this 200 days right here. AMD, below the 200-day. ARM was really strong yesterday, and then just giving it all back below that pivot level. And then you have names like Avgo coming back in, rejecting these highs. And then I believe TSM reports earnings this week. So that will be something to keep an eye on. And, TSM is a big name in the semiconductor sector. So that can always move a lot of names there. So that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com. And you can reach out to Dan or Don at revereasset.com. Phone is 855-REAL-WEALTH. That is 855-732-5932. And if you're interested in becoming a client, please reach out. And with that, I'll wrap it for Tuesday, October 15th. This is Connor Bates with Revere Asset Management, telling it like it is. Thank you guys for watching. Have a good night.